Good morning. This is Unusual Activity powered by Financial Juice with George Avedon and Milton Marmonides. Thank you for joining us today. As always, lots of activity in the markets, overnights, rates. So let's get to it. Where are we in the futures? Futures are down 4.25 at 1957.25. We just have initial jobless claims coming in at 287,000. Expected was 295. Week over week was 2.381 thousand. See, USA continuing jobless claims 2.38 million versus 2.41 estimate, revised from 2.4 million. So let's again, futures just a little bit off those lows at 3.5 at 1958.25. So let's get into just a recap of what we had yesterday. Certainly a very volatile market yesterday. Initially we had a risk-off trade in pre-market, a little bit of a sideways action in the morning, and what everyone's really speaking about is that FOMC minutes and the reaction in the marketplace, and certainly we went right above that support level and finished higher in the marketplace. Dow Jones up by 1.64% at 16,994.22. S&P 500 1968.89, up 1.75%. Nasdaq at 4468.59, up 0.9%. So certainly the fluctuations continue in the marketplace, and we'll get into that a little bit later on. A bit on the geopolitical, certainly monitoring that ISIL situation. Turkey, we mentioned this yesterday, the reality of that Article 5 Washington Treaty, and what other participation by other countries could mean within that particular ISIL Syria airstrike. So again, keeping an eye on that, absolutely crucial there. Ukraine-Russia situation, nothing super coming out in terms of the ceasefire. Ceasefire seems to be maintained with a buffer zone. Really what's been in conversation with respect to Russia within the last, I would say, several days, starting certainly last week and coming into this week, is this impact of the crisis, the Ukrainian-Russian crisis, on the Russian economy, impact of the sanctions. How are investors viewing the Russian situation? Meaning, is foreign money, what is money outside of Russia doing? Within Russia, are they thinking about leaving? We talked about this notion of capital controls within Russia. Certainly, everyone knows that Putin, to say it mildly, is an interesting character. Lot of conversation with respect to geopolitical environment, how he acts in the geopolitical spectrum. So again, that's something that's absolutely being monitored. We know that he's concerned about the drop in the ruble. We know that he's concerned about the drop in the oil, and with respect to the reserves that are in Russia. So again, that's something that institutions are monitoring, it's something that traders are monitoring, investors, and so forth. So also in that same light is what are the geopolitical events within Ukraine, Russia, and how that's impacting the Eastern European economies. So we know that overnight there are four different countries that had their 2-year yields in negative military. So that's something that's very interesting, and so we'll keep an eye on that. Um, we talked about jobless claims. Again, less than expected initial claims, 287,000. Expected was 295,000. Futures down 4, so not a huge shift in those futures after those initial jobless claims. Wholesale trade inventories up at 10 a.m. The consensus is 0.3%. We know that natural gas inventories announcement at 10:30 a.m. We have a few folks that are speaking today. We know Draghi's at 11. Several Fed speakers throughout the day, 9:45, 1:10, 1:15, and 3:40. We'll list those names in this PowerPoint slash deck. So keeping an eye on that specifically, and we'll get into this conversation here. The minutes from the FOMC, and we'll also put up what I thought was really interesting from the consensus, what the FOMC is expecting with respect to GDP and with respect to specifically the PCE, and this is something that they're monitoring very closely with respect to their inflation gauges and going out into the future. So also today, Fed balance sheet at 4:30 p.m., money supply at 4:30 p.m. So one of the things that's interesting is, and we'll have Milt chime in here. We saw without getting into specifically the levels yet, but really, we saw the minutes come out at 2 o'clock. Milt, I thought it was more of a sideways trading yesterday. FOMC signaled they're concerned about the global slowdown. Now, I can't imagine that this was any shocker to anyone. We've been mentioning the perspective, this notion of global slowdown for several weeks now, right? The dollar strength, and they talked about the PCE and GDP estimates. Clearly, the market saw that as a positive, and went up. What's your thought on that? I mean, clearly, it had an impact on the markets yesterday.
Well, yes. As we can see, yesterday's trading day, market basically did absolutely nothing. And once these FOMC minutes came out, we had a rush with volume, I must say. The markets rallied hundreds of points off that report. The reason behind it, which a lot of people that I've spoken with are a little dumbfounded, is the fact that the FOMC minutes were actually worse than, economically wise, worse than expected. Yet the market rallied hundreds of points. Why? Because, they keep that, the QE, they keep all the rates lower, they keep everything, the Fed is more accommodative to the traders. It's a little awkward that the market rallied so hard off of that number, off that report, but it's the market we're in right now. It's clearly the perception was extremely dovish. But in reality, when you sit back and actually read the report, which we have, it's actually pretty negative for the economy. They downplayed a lot. And it just seems like something is just not right. Why the constant negative feel? Why is everything starting to turn down again? It's just it just gave a weird vibe to me yesterday.
Thanks. One of the things that I just popped this on into the deck here. So what this is a PCE inflation and core PCE inflation, right from the minutes of the FOMC. Just basically cut out a little piece. I thought it was interesting. If you take a look, their target is 2%. If you take a look at the ranges of what they're anticipating, again, it's right within that, mid ones, just maybe perhaps above the 2. So it doesn't seem as though inflation really is a concern. clearly. We have the dollar strength. They're concerned about the dollar strength. Why are they concerned about the dollar strength? It's the notion of um, exports. If the dollar is strong, the companies that manufacture in the U.S. will have it will be more expensive for uh, uh, foreign companies or customers of the U.S. to buy U.S. products. Clearly, right? That's Econ 101, a flow of money and so forth, right? So that's something that they're concerned about. Clearly, it had an impact on the market. Now, moving on, let's get into a little bit more of the global economics that we're seeing it through. UK Bank of England leaving interest rates unchanged, as we said yesterday. Polish central bank as well lowered their rates more than expected. Um, the view from the global banks is that, as Milton said, Fed more dovish than expected. There's various, from global economy perspective, France in process of changing their welfare rules. German exports down 5.8% in August. So again, this continued negative perceptively negative news about global economic slowdown or that perception of global economic slowdown. Clearly, it's weighing on not just investors, not just on traders, but it's also weighing on the really central bankers. So that's something that we really should keep an eye on. And we'll get into that a little bit later. Let's check a quick check on commodities, energies, raw materials. Let's take another look at the S&P futures down 3.5. Not much change on that. We were down as much as 4, currently down 3. We were positive in the morning, bit of a change. At 1959, the S&P futures. Oil at 86.95, below that 87. We saw that drop yesterday, and it stayed down 36 cents on that. Gasoline down 0.0206 at 2.2978. Heating oil down 0.0146 at 2.5613. Now, just something, it's kind of a pseudo bellwether. We're in the northeast location of the U.S., and I would say it's been a little bit on the milder side. Just keeping in mind that just a little bit. So natural gas down 0.004 at 3.851. 10-year. This is just a really big story here, and it's at 2.312, maintaining that rate under that 2.4. The 30-year at 3.05. Again, that steeper yield curve longer than in the longer maturities than a month ago. Gold rebounding a little bit at 12.28 even. Silver at 17.61, up 55 cents, and platinum at 12.8731. Always keeping. You'll see sometimes during the day, at times, some news about raw materials. So we'll put that in. We have seen, we've seen analysts come through that they're a little bit negative on specific, whether it's commodities, energy. Yesterday we saw, I believe it was natural gas, correct, Milt? Somebody's downgraded natural gas. Again, they do tend to be a little bit late to the party, but I'm seeing a bit of a pattern develop, correct? I mean, it's this notion of, maybe dare I say, a slightly negative sentiment on commodities, energy, raw materials. What do you think? I mean, I think it seems to be the in.
Well, if you look at, if you just throw up any type of chart in that industry, in those sectors, George, in all reality, those equities basically crashed in a way,
Absolutely.
Some stocks have dropped 30, 40, 50% from a month ago. And you sit back and you try to evaluate that to the economy and the stock market, the overall look, and you just dumbfounded at that aspect. You really do not know because I remember back in the days, it used to be commodities used to run the show. If commodities were underperforming, something wasn't right in the economies, and then you have the strong dollar, which is also an effect. So you have, it's like a big conundrum all thrown together, and people just sit back and they're like, what the hell, what are we going to do? So the play right now is, you have to wait until the bleeding stops. And when that bleeding stops, I think these will be a tremendous trade because they're so depressed and they're so beaten down that, it comes to the point where, like Buffett always says, when there's blood on the street, that's when he's buying. I don't see it yet, but you may start seeing it very, very, very soon in these all entire sector names, from coals to oils, copper, steel, every type of commodity has been getting smacked. The question is when it's going to stop, and how big are you going to go into this area to make that money back, because it's clearly oversold. So it's just a tough decision.
And that's a great point, Milt. One of the things that to keep in mind that how intense will this quote unquote negative perception, negative economic data will continue to impact, or vice versa, how the commodities, energy, raw materials, also, and vice versa, how long will commodities, this drop in commodity prices, rise in the dollar, will continue to impact the perspective, the thought of global slowdown. So what I want to do is also, before we get into a little bit more discussion on this, is run through the Asia and Europe. Asia down 0.75%. Hang Seng, forgive me. Hang Seng was up 1.17. Forgive me, I should put a plus sign on that. Shanghai was up 0.28%. If we take a look at Europe, I'm going to change those numbers. This is FTSE down 0.38%. The CAC down 0.38%. The DAX up 0.41%, lower than they were in the morning. Again, futures were up higher. It is lower, so it's a risk-off trade coming into the opening here. So one of the things that what I want to bring up, Milt, is this, and this is not a scare tactic. This is not. I just want to bring up a slight similarity with respect to the perception of volatility, right? This is not 2008. This is not meant to be a comparison to 2008, but I want to bring up this notion, this perception of shift of how volatility changes. For example, if you take a month ago, right, Mel, everything was relatively rosy, right? But all of a sudden we had this perception of a shift of thought process and reaction to negative news, right? It really does remind me of, again, this is not a reference to, but it does remind me of this perception of change during the crisis or during other crises, this perception of quote-unquote negative news, correct? Wouldn't you say? And I will say that big shift in that.
I agree. Back in the, months ago, George, it used to be the fact that any negative news, you'd buy the market. Any positive news, you'd buy the market. Nowadays, it seems like anything that can cause a ripple is being looked at and sometimes even overlooked. Some things are even are even to the point where you have to sit back and be like, is it a little extreme? But then you realize that, we've been in such a different environment in these markets lately that maybe it is some sort of a shift in what's going on, because you sit back and you look at these markets and you get these volatility, and you haven't seen it for years upon years. But the scary thing on top of that, even more, George, is the VIX barely moves. So you're getting 100-point plus moves on a daily basis, and the VIX still is trading between that 14 to 18 level. There seems to be complacency in these moves. There's no fear yet. The fear factor you'll start seeing above 20, 25 in the VIX. So it's a complacency sell-off and a complacency buying. So you have to sit back and think to yourself, what really is going on behind behind the tape? It's not what it used to be 2, 3, 4 months ago when it was a consistent rise. Now you're getting that volatility back. It's good for the day traders. It's good for the swing traders. But is it really good for the market? That's where a lot of people have to understand and think to themselves, what is the next step? Do I see these levels? Do I buy these levels? Do I sell these levels? You really do not know, because there's a shift in reality in understanding of what the news actually can do right now or mean right now. Good news can sometimes be construed as bad news now for the markets. Bad news for the markets seems to still fit with the good news for the market, because they are complacent on this fix of Fed stimulus. So when that starts to turn, you're going to start seeing little by little headlines are really going to start affecting what the market is going to do, because people need that. People need that stimulus. If you don't have it, the question is, George, I'll ask you this.
Yes.
What is it going to be like when there's no stimulus in this market? Is it going to be what it was 5, 6, 7 years ago? No one really experienced what it really has been without zero rate interest and QE. So it's going to be a mind, it's going to screw with the mind to get the actual reality when everything stops. And the question is will it stop? Who knows? But what will the trade be when it stops?
Milt, I think that's a great question, and it's a high level question, and at the same time, it's an important question. Why? Because we always bring up, we always bring up macroeconomic and global political climates before we get into the nitty gritty of the specific stocks and what's happening. But why? Because overall, it seems as though, and what we've been saying over the last several weeks is this notion that macroeconomic is beginning to enter the picture of affecting the actual day-to-day of functionality of the markets. It's affecting the internals of the markets, right? Milt, we're seeing that over and over again. And if the market is negative, right, if the perception of the market is negative, taking into account macroeconomic news, it's going to have an effect on individual securities, right? I mean, that's basic trading 101, right? I mean, that's so. In answer to your question, I'm circumventing this a little bit, but in answer to your question, we don't know. That's the, and I think that's what's entering this equation a little bit. This notion of we had QE for the purpose of improving the economy, right? That's basic, right? We're flooding with liquidity, flooding with the availability of money. It's Econ 101, guys, right? What's economics? Economics is the flow of money, okay? So we're flooding that. Now it's ending. We're now seeing, what's the fear factor here? The fear factor is a slowdown of macroeconomic global economy, right? What's that going to happen? Unfortunately, that's the I believe that's one of the reasons that volatility has entered the equation.
George, one thing that I want to point out also, the other day I was looking at charts, just to get an idea of some data points regarding QE. And tomorrow, I'm gonna find this chart tonight. Tomorrow we'll post it on the site.
Absolutely.
It's a chart that shows the direct action of what happened to the market once QE 1, 2, and 3. When all the QEs ended, what the real action in the stock market was. And if you sit back and look at that, it seems like, like we discussed, many just do not know what to do. So the reality was buy on the QE. So through these charts, you saw the markets crack a little bit, because they don't get that stimulus anymore. So they probably think to themselves, they really do not know what to do at that point. So they're selling the stocks or they're shorting or this that. So it's an interesting chart to put up and let people see what really happened after all the QEs ended and what happens when they restart QE. Like when we ended QE1, what happened, and then when we started QE2, the impact of QEs. So it's an interesting chart to actually take a peek at. It's a good thing for people to understand, and it may even give a precursor to what could possibly happen when QE ends this month.
I think that's a great point. And we'll definitely put that up tomorrow. And listen, I think the reality is this conversation will just continue over the next few months. This impact of QE ending and its impact on with the global economic slowdown of uh, global economies, QE ending, and its effect on the market. So what I'd like to get into is some of the earnings. Um, uh, we are in earnings season, right? So we've begun. Alcoa, better than expected. Currently now at $16.28 in pre-market, as high as looks like $16.88 in this morning pre-market. Anticipating PepsiCo and Family Dollars today. Also, Cuda earnings today. Now, getting into one of the things, and we'll get into specifics on what we saw yesterday. We're until Ebola goes away, and we're not seeing this go away yet. Ebola will persistently be in on the news. It's going to impact particular securities. So the stock list is growing. And the reaction in these particular stocks. Now remember, not every stock will react the same. Okay, so TKMR will react different than HEB. CMRX will react differently than TKMR, Lake, and so forth. So that's something that's absolutely critical to note. This isn't a basket portfolio that we're putting up here. This is stocks that you should absolutely keep an eye on. If you're interested in the way Ebola stocks trade, if you're interested in even from an educational perspective, where you want to see how stocks react to immediately to news, that's a really good thing to do. So one of the things that's in Ebola is certainly the Spain case. There was that Sierra Leone gentleman, I believe, patient that passed away, isolating the nurse and also the isolation environment in Spain. So that's something that's being investigated and the impact on that and so forth. Also, we had that Dallas case death yesterday, unfortunately, and also a possible second case. One of the things that you want to keep an eye on is how what the governments are saying in all of this. Remember, it does have an effect, folks, and that's why we bring it up. It's not exactly. It's a bit vague sometimes, right? And I think that they're made to be, but again, keeping an eye on that. Some other activity going on in the pre-market hours. We have AUXL. We have up 11% in pre-market to acquire Axelon Pharmaceuticals for $2.6 million. That's 33.25 per share. Stock price at currently in pre-market at $33.16. KFX lower preliminary Q1 revisions misses expectations. KFX currently down 19%. That's a rather big move down. Considering it finished the day at $7.81 yesterday, currently down to $5.85. VOD Vodafone Group lower to reduce at Nomura. Vodafone currently down 3%, indicating now pre-market at $32.29. Gap falls on September sales. Remember, there is that change in CEO. Gap is down 10% at $37.32 currently in pre-market. GTIV up 14% to be acquired by Kindred for $19.50. in cash and stock. Currently, market is at stock is at $19.24. EOPN, E2 Open Q2 loss widens, cuts fiscal year 2015 outlook, currently indicating at $8.40 from a close yesterday, actually near the high yesterday at $9.27. So that's see how that works out in the market. EXAR, sorry guys, it's a little bit it's bolded. We'll adjust that. EXAR up just a little bit over 7%, currently indicating at $9.23. Corporation provides positive update for fiscal second quarter outlook. DRWI up 7%. Dragonway reports strong second quarter fiscal year 2000, and then comments on 2015 possible results at currently indicating at, well, was it high as $1.58, currently at $1.36. Relatively sideways trading yesterday, other than having a stick up towards the end of trading day. AMD down pre-market 7%. CEO steps down. Chief Operating Officer takes over, currently indicating $3 price at in pre-market. One of the things that we wanted to bring this up, and this is kind of interesting, we always talk about 13D filings and activist investors. Certainly, Icon is an icon. Sorry, guys. Bad pun. But he talked about a particular letter to Tim Cook yesterday. It looks like based on the letter, he's valuing the company at $203 per $203 per share. I wonder, Milt, considering the current environment, and we'll have a gentleman come in to talk about specifically Apple, one of the more intelligent people we know in the industry, and really discuss this notion of Apple and maybe where he sees this particular look. Apple is a widely held security, right? We talked to Scott last week. He holds the security. His opinion on the site. We'll have another gentleman come in and discuss this. Clearly, Milt, these folks have an impact on these securities, right? I mean, no matter what, even in these stocks, we see the stock up in a little bit in pre-market, $101.73. Candidly, I'm always a bit skeptical at reading these particular activist investors, but again, he's been right? I mean, Icon is a force.
Well, he's a force in certain areas. I can throw up a whole bunch of companies that he's been getting demolished in. But the question you have here is, which in my opinion, I always ask myself is it right for an activist to come out here and pop a stock that he has such a large piece of ownership of? He comes out and the stock pops $1. Why is that? Why can someone like that come out and say something regarding a company, and the stock rallies so extreme? Yet, people complain of when some random person throws his opinion out there regarding a company, and they're like, oh, well, he's trying to pop his book or pump his book. In all reality, that's what everybody tries to do.
Absolutely.
You don't see him coming out about a company he doesn't own.
Correct.
Correct. It's it's something to think about as well, because in reality, they're not going to say what they don't want to say. They're going to say what they want to say to make their money on each name. So you take everything with a grain of salt. It's very difficult. It's very hard to make that decision. But like I say, he does move the name. He moved Apple $1. Shockingly, he moved Apple $1. But in all reality, everyone knew what he was going to say. What else can you say? I just recently got off the phone with someone, George, that mentioned to me the fact that he's running the Apple into a possible Microsoft type
Yes.
stock
Yes.
when that innovation is no, but they have all that cash
Correct.
and they do not know what to do with it. It's difficult because it's hard to really fathom the idea of Apple because Apple is such a large staple in this economy that what is the real value of Apple? Is Apple becoming Microsoft, or is Apple going to make that turn like when Jobs came back on board with the iPod that revolutionized the whole industry? So it's very hard to get a feel. Each activist is going to come out and talk their book, say what they want to say to pop up a stock. It's you take everything with a grain of salt. It's a hard market, it's a hard trade. So I always say take caution with everything you're doing. If you feel it, put money to work.
Absolutely. Thanks, Milt. And one of the things that Milt brought up is this notion of buybacks, and that's something that we'll discuss. We're working on a nice presentation for you folks that will, at the very least, put some, give you a little more context behind what those buybacks would mean for particular security. So again, it's an interesting concept. It's been going on for quite some time, especially with rates being rather low. Top line growth, sales revenue growth hasn't been absolutely stellar. So companies need to quote unquote financial engineer their balance sheet. So, and we'll get into that notion at another presentation. But again, something that's been happening quite a bit as of late. Let's get into some of the top insider purchases overnight. AGCO director purchases 88,000 shares at $43.10. Stock currently indicating $43.13. Pre-market not trading yet. So we'll see how that translates into the day. SFXC CEO purchases over 500,000 shares, indicating at $4.78. Open finished the day yesterday at call it $4.34. AVNW 10% owner purchases 152,000 shares, $1.77. Not a huge price stock, but again, 10% owner purchasing a decent amount of shares there. Finished the day yesterday, $1.86. OHAI director purchases 16,000 shares at $6.30, indicating a $6.43 pre-market. ENTG 10% owner purchases just under 48,000 shares at $11.55. Nothing yet in pre-market. And OPK CEO purchases 20,000 shares at $8.39. One of the things that comes in, Milt, late yesterday, if I'm not mistaken, we also had an OPK option, right? A buy of options towards the end of the day. So one of the things that we watch during the day, and we think this is absolutely, really important to monitors, not just the insider purchases, but the carry through on options. If you see a CEO purchase 20,000 shares, and then you see an option, option buying of calls, block of contracts, someone's really putting out a bet that this particular stock will go higher. So I think that's really something important to keep in mind. So let's see. Let's move on a little bit here. We talked about Gap. AMD CEO replaced. JCPenney in the moves. There's been some earnings revisions from Wells Fargo, currently indicating $8.14. Ruby Tuesdays RT, currently pre-market at $8.68. Revised earnings revised up at Wells. UTI, let's see here, revised up as well as Wells at $10.19. Uh, Indication for pre-market. Hawk, HAWK. All right, folks, revised up at Wells Fargo as well, indicating at $36.10. T-Mobile, earnings revised down at Wells. Let's see if there's currently no indication yet on T-Mobile. See how that translates into the market. So a couple of things coming out of Pacific Crest. They're positive on infrastructure, data, cloud, analytics. So a couple of names that's been thrown around there is FFIV, F5 currently. Let's see, where are we in the pre-market at 117.49. ANET, ANET, Arista, excuse me, ANT currently indicating $87.54. DATA, Tableau, and that's $72.46, and of course EMC. They're a bit increased risk on TDC and ATEN. So again, let's take a look if there's any impact on that particular paper. TDC at $41.95, and ATEN we have at initial indication of $4.64. So Tesla, they have that Pacific Crest. They have that as outperform. Price target is $316. This notion of you have your stocks that are very closely linked to, as we discussed about, in core material, raw materials and energy and so forth. And of course, Milt, this is something that you and I talk about constantly, and that is this notion of companies that, let's put it out there, they're not profitable yet, right? And the market, have we seen a pullback yet? Have we seen, or are we anticipating some kind of pullback in those names? We've seen a huge pullback in the energy stocks and raw materials and so forth. What's your thought on that? I mean, clearly it's a kind of a unique situation, right?
Well, exactly, George. You're having you sit back, like I say, you sit back and you look at some sectors and they've been demolished. And these are legitimate companies, even though they're in an area right now where that's not in favor. But they're established companies. They have been around for tens of 20s of years, and they're literally getting demolished, down 50, 20, 30, 40, 50% in the past couple of months. And then you see these new names, these names that are not established, that don't make any money, and all they do is go higher and higher. So, I speak with many people every day, and their feel is, what is really going on? How is a company that makes no money constantly go higher? How is a company that is not established continue to go higher when the market is dropping? It seems like that mindset has not changed yet. The mindset of the markets and this, you can see a slight tweak in that. But when it comes to certain names, they just continue going higher. It does not matter what the market does. It does not matter that they make no money. It does not matter that their products are, not even great, but they just go higher because the mentality is buy on those names. And until that changes, it's just going to continue rising. So those crazy names, those momentum names are continuing to move higher because people just keep throwing money into them because they don't know where else to put it. You're not gonna, people are trying to pick the bottom in oils, or they're picking the bottom in, this or that. But in the end, it's comfort. And if you're not comfortable in a name, or you have that conviction, you're gonna go where the herd goes. And the herd currently is going to those high momentum names. And when that straw breaks, just be a little cautious. But until that happens, George, it's fair game on those. I've seen it, and it just continues, and the people just do not know what really is going on with that.
Got it. Thanks, Mel. A couple of things coming through. As you see, I posted some things. Riverbed up in 3.1% in pre-market. Riverbed Technology cuts Q3 view announces restructuring, but yet they're up in pre-market. A couple interesting, with the proverbial soap opera between GTAT and Apple coming out, asks bankruptcy court to keep its Apple relationship and contracts confidential. So again, just keeping an eye on that. You'll see that come through the newsroom on the Financial Juice website in the chat environment. A couple of more information on Apple, and what we'll do, we'll run through a couple of examples from yesterday, and then we'll go through just some key levels just to keep an eye out as we go into the markets, and we'll in a couple of minutes we'll take a peek at another look at where the futures are and 10-year and so forth. So Apple has only 26.8 billion in domestic cash, and any stock buyback promo will mean another 20 to 30 billion in new bonds. So again, that's interesting. This is on the heels of course, Icon's letter. What we'll do in the repository, we'll post these upgrades, downgrades. There's quite a few of them, and I think it's just a great resource to keep your eye on. Who's downgrading and what's the intention, what they're anticipating these particular stocks to do, what's the price target. I think that's really important. So we'll put that into the repository in this deck once we're done with the presentation. One of the things I want to bring up, we always bring up this notion of news and how it's affecting the particular stocks overall macro indices, if you will. So for example, yesterday at 3 o'clock. There was rumor and nuance that Icon will bring this up to Apple. Also follow through 2 minutes later in a nuance, call it a block option contract, the buying of calls on the ask at 25 cents, 1,553 contracts. So you see that impact in the particular security. So again, really important to monitor that information that we're putting through, and it'll give you more color onto why a particular security is moving. So I think that's really important. One other piece. And this is interesting. There's two particular examples that we want to show. We've been talking about Ebola and the impact on specific securities. So for example, at 11/16, we had the Texas Health Reports death of Ebola patient Thomas Eric Duncan. Right, so that was yesterday. You see two completely separate reactions in stocks, right? This is why the list that we bring up and we'll post it at least once a day into as Ebola comes in as reference points. So for example, this is CMRX, right? I'm sorry, no, this is TKMR, and this is CMRX. The list of stocks that we gave you is not a basket of stocks. We're not telling you to buy or sell. Is basket just keeping an eye on those particular securities. For example, CMRX, you see this at 11/16, a complete, it looks like, just dropped off a cliff. Why? Because, if you've been following our information, CMRX was their medication, the name of it just disappeared from my mind, excuse me, but they're using this particular they use this particular medication on the patient, did not work. Okay, so a complete decrease in that particular stock over, if you see the spike in volume, and over, let's say 1, 2, 3, 4, call it 5-10 minutes. So a huge decrease in that. If you take a look at CMRX on the chart here, bear with me, it went from literally 35.16 down to 28 within a course of, call it 10-15 minutes, right? So that's really really important. to monitor. The other stock that went up was TKMR. So again, you see this divergent, almost a dichotomy of reactions with respect to two individual securities. And how do you trade it? How do you think about this? So certainly when you see this information, one, you do nothing, right? You just monitor. Maybe you're just learning how to trade this. Two, when are you hearing this particular information? Did the move happen yet as you're hearing this information? Do you want to participate in the downward or upward move, right? Maybe you have an algo in place where you're buying one and selling the other. Um, is the time that you're getting the particular security in time, or you're going to quote unquote churn that particular information, right? And of course, what's the reverse of that, right? So we see, for example, in TKMR, we saw a little bit of reversal off that high, off that initial pop, and of course, we see, well, CMRX really came down quite a bit and stayed, but it did move uh, higher slowly along with the market. So again, really keeping an eye on that. One of the things that I'd like to do is to, Mill, if we can, just run through some of the key levels that were going into this. If let me just run through the yep, S&P futures down 5. So Milt, let's do a quick run through where we are on the futures and what are you seeing on this?
Give me 1 second.
Yeah, no problem. While we bring up the charts.
Okay, I'm good.
Okay, good.
I'm just gonna do very quick, guys, because the market's about to open. I don't really have that much time. So I'm looking at the VIX real quick. Like we said, we have that 18 number on the upside in the VIX. Touched it again, sold off on it. It's clear that the range is 14 to 18. Closed at 15.11. As you can see on the chart, we keep on mentioning that 18 handle. Watch that number. Look at the ES. ES is basically in range. It's been on support. It's trading on support. As of now, the ranges, each future has specific ranges. The 1920, 1925 in the ES to 1980s on the upside in the ES. So it's in range bound. Support, short-term support is on the 1930, 1932 level, in the 1955 to 1960 level. So watch those numbers as support levels. NQ, NQ is basically, trading even close to the resistance in yesterday. So especially with that spike. So watch these levels on the NQ around the 4,000 number. If it breaks that number, you may see a quick spike down to about the 39.75, 39.80 number, and the YM is trading right now at support, clear support, 16,840, 16,850. The number to watch on downside is about 16.5, 16.6 number. Keep an eye on those levels. Keep an eye on that number. 17,000 resistance on the YM. Good luck trading today, guys. You guys got about 6-7 minutes left to the market opens, so good luck, good hunting. George?
Absolutely. Thanks, Milt. So we're gonna just a few more things coming through, and we're gonna finish up here. RYAM, and we'll post this into the deck as well. RBC Capital downgrades Ryanair Advanced Materials to underperform, lowers price target to $27. LMNX Cohen and Company upgrades Luminix Corporation to market perform, raises price target to $18. CUR announces first patient treated in neural stem phase 1 spinal cord injury stem cell trial through the UC San Diego Sanford Stem Cell Clinical Center. So again, we'll take a quick peek at the, let's see here, RYAM currently, sorry, here with the slash, RYAM, nothing indicating yet. LMNX, Luminix, we have at $20.90 finished yesterday, and CUR on Finished the day at $3.21. So let's have a quick check of the markets before we let you guys go. S&P futures down five and a half, call it 1956.25. Oil down 71 cents, 86.60. Certainly keeping an eye on that. You know, we're saying this over and over again. It's this downturn in commodities, energy, raw materials, and the impact on not just macro indices, but also specific securities. Gasoline down 0.0114 at 2.3070. Heating oil down 0.0122, 2.5637. 10-year, one of the larger stories here is 2.318. So again, really keeping an eye on that. In Europe, FTSE down 0.22, CAC and Paris down 0.19%. These are all percent. DAX is up 0.36. So again, keeping an eye, risk off trade. We wanted to thank you for joining us today. Lots going on, and we will see you tomorrow. This has been Unusual Activity, powered by Financial Juice, with George Avedon and Milton Maimonides. Thank you and happy hunting.